we always, of course, the king of the metals is gold. But right now, silver is particularly interesting. This is just the beginning. We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start.
Silver it blew through 50 not that long ago, and now it's trading a little above $60 an ounce. So we're getting up into nominal all-time record high prices for silver. Gold and silver have outperformed the S&P 500 for the past 25 years, so far in this century. They are better assets than blue chip stocks. Oh, and crypto has discovered gold. Tether has now bought so much gold that it is in the category of a small to medium-sized central bank.
Silver just smashed through $60 an ounce for the first time ever, surging 4% in a single day amid brutal global supply shortages and Fed rate cut bets that could supercharge industrial demand from solar tech and EVs. Gold's holding strong above $4,200, up 60% this year alone, as central banks hoard it like a dollar shield. But here's the urgent kicker. With inventories vanishing and experts eyeing $250 silver by mid-2026, this rally could explode or fizzle fast if supply chains snap back. Don't sleep on it. Your portfolio's at stake. Financial expert John Rubino breaks down these explosive market dynamics. John will explain why the yen carry trade is collapsing and what it means for your investments, from the US to global markets. He reveals why gold and silver mining stocks are set for a best-ever earnings period in early 2026, offering investors a rare chance at dramatic earnings momentum. Are you prepared for the biggest profit opportunities of the new year? Let's watch clips from John Rubino's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
First, you want to talk to us about the unwinding of the yen carry trade, why people need to understand what that means in basic form, and why it's important to all the markets that most people do care about.
Yeah, to understand this thing, it is a pretty big deal, we have to go all the way back to the 1990s when Japan had a massive real estate bubble. Really bigger than our real estate bubble of the 2000s. And it was potentially catastrophic for the Japanese economy. So the Japanese government ramped up spending and pushed interest rates down to extremely low levels. So ever since, the Japanese government has run big deficits and its debt has piled up to the point that that government is the most indebted government on a per capita basis in human history. And so ever since, they've kept interest rates extremely low in order to allow them to finance their debt. But what that also allows is for financial players from around the world to go to Japan and borrow yen at super low interest rates. Then they take those yen and they go to someplace like the US and invest them or, cash them out and invest them in, say, treasury bonds that are yielding 3 or so percentage points more. And then they make the spread. They do it with leverage. So it's an incredibly profitable thing to do. But it only works as long as two things are true, that the yen doesn't go up in value because that makes paying back the yen loans more expensive and wipes out the spread that you earned on treasury bonds, and that Japanese interest rates don't go up to the point where they're comparable to US rates or Brazilian rates or German rates or whatever. And that makes the carry trade unprofitable. Well, the yen is still kind of falling a little bit, so that hasn't been satisfied yet, but Japanese interest rates are spiking. And largely that's because the Japanese government has so much debt that now people just don't want to lend it money by buying their bonds. So, for instance, the Japanese 10-year yield went from negative. In other words, the Japanese government made money by borrowing money back when you had to pay them for the privilege of owning their bonds. And now it's up to around 2%. And that's high enough to basically make the yen trade no longer viable. And that means the trillions, multi-trillions of dollars that are bet on the premise of the yen carry trade continuing to work now don't work anymore.
The gold and silver markets have been really burgeoning this year. This has been a standout year for both gold and silver. What are you watching in that arena, and what trends do you feel are in place, and what should people look forward to?
Yeah, the whole world is rediscovering precious metals. Gold and silver have outperformed the S&P 500 for the past 25 years. So far in this century, they are better assets than blue chip stocks. And that's the kind of thing that gets a lot of people's attention, right? If you're a momentum trader or just any kind of generalist investor, you see that kind of price action over an extended period of time, and you have to pay attention. So all kinds of positive things are happening for precious metals. The central banks of the world are still buying. India is now, or starting in 2026, it's going to allow people to use silver jewelry as collateral for loans as a way of, getting that stored money out of people's vaults and closets or wherever, and circulating into the economy. And the BRICS countries just literally released a currency that is backed by gold. So stuff is happening. Oh, and crypto has discovered gold. You got the big crypto companies like Tether, and they're choosing gold as one of the assets that they use to back their coins. And Tether has now bought so much gold that it is in the category of a small to medium-sized central bank. And that's just them. That's just one crypto company. And the concept of gold coins that trade on a blockchain is really appealing to a lot of people in the crypto market, and there's a ton of money in the crypto market. So wherever you look, there is capital flowing into precious metals. And like you mentioned, silver it blew through 50 not that long ago, and now it's trading a little above $60 an ounce. So we're getting up into nominal all-time record high prices for silver, and gold has been there for quite a while. Gold passed its inflation-adjusted all-time high just lately. So yeah, the precious metals as a concept have been discovered now, and it's safe to say that capital will keep flowing into them as long as governments continue to debase their currencies. And that's great for stackers. If you have a bunch of physical gold and silver, you're feeling pretty smart right now, and considerably richer than you were 5 years ago. But it's really good news for the gold and silver miners because to an extent, they're managing their costs now. So when gold and silver go up and their costs remain reasonably stable, their margins just blow out. So a lot of the gold and silver miners are making dramatically more money right now than they have been in the recent past. And they're just coming off 3 phenomenally good quarters. And we're almost done with the 4th quarter now, which is going to be the best quarter ever for gold and silver miners as a group. So in January and February, there are going to be a lot of earnings reports that come out that just look like blowouts. It's not clear if people have come to expect those blowout numbers or not, whether they'll be pleasant surprises or not. But without a doubt, the numbers are going to be spectacular. So if people are out there looking at earnings momentum, which is it's one of the momentums that generalist investors pay attention to, there's going to be dramatic earnings momentum on the part of a lot of mining stocks out there. So I think there's a decent chance that the first part of 2026 is going to be one of the best times ever for the mining stocks. So we'll see.
Financial expert Egon Von Greyerz explains why this metals boom signals the accelerated collapse of the current monetary era. He warns we're at the brink of a monetary meltdown, debts exploding, currencies crumbling, stocks tanking, making gold and silver nature's ultimate saviors. Silver's the star now, smashing $50 resistance with industrial shortages set to ignite a surge to $250 or beyond. Silver's the star now, smashing $50 resistance with industrial shortages set to ignite a surge to $250 or beyond, while the gold-silver ratio plummets from 120 to 69. Now let's watch some clips from his interview.
It was clear to me that as the risk was mounting, as debts were mounting, as derivatives were mounting, that we were getting to the end of a monetary era. And a monetary era always ends in a debt explosion, and then a collapse of the currency, a collapse of the financial system, social unrest, etc. So that was what I was talking about already 35 years ago. I came to the conclusion, of course, that gold and silver, to some extent, were the best forms of assets to hold for wealth preservation purposes. They're nature's money, and the only money that has survived in history. So, and of course, you talked about silver. We always, of course, the king of the metals is gold, but right now silver is particularly interesting, and also it's interesting to know that whenever the metals make a big move, and that's what's happening now, the gold-silver ratio starts coming down. And the gold-silver ratio is very high now. It's been over 120, it's been 80 for a while, and now it's down in the 70s. And we will see that going to maybe 30 or even 15, the long-term average of the gold-silver ratio. So gold-silver ratio means simply gold price divided by the silver price. So now, the move, you remember, I've been around for a long time. So 1980 was the first peak we saw in gold at $850, and then silver was $50, and then silver came down to under $10. I think came down to $5 even, and gold corrected also, but not to the same extent. And then again back in 2011, gold was $1,920 and silver was $50 again. So gold had more than doubled and silver was the same, top as 30 years earlier. And again, we had a big correction, always bigger in silver. And now we're again back to 50 for silver, but at over 4,200 for gold. So this is unique. And this is for the first time, silver is actually coming above the $50 level. And I think this is just the beginning. We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think, if you compare on an adjusted level, if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start. We are going to see the most massive explosion in the silver price. I mean, I call this $50 line resistance line, and it isn't resistance anymore because we've gone through it properly. But the market is still holding it at around $55, $57. I think we're going to see it all of a sudden just explode. And that's not sensational. That's just a reflection of the demand for silver. The silver industrial demand has gone from 10% of silver use to 50%. 50% of all silver is now used for industrial production. And then the investment demand, there is always a shortage every year. So we're seeing massive shortages in the physical market. And for commercial purposes, silver is, of course, used for anything from solar cells to car batteries to electric and electronic products. And that, as I said, there's major demand. And Johnny, nobody realizes, because all of the trading in silver is basically paper. And no one has ever successfully used paper for a car battery, an electric car battery, or a solar panel. So we're not going to, there will not be enough silver at these prices. So there will be this, they will jump all of a sudden. And so I see silver as just a sign now, or not just of silver demand, but actually it's a sign of the beginning of the accelerated fall of this monetary era, which obviously means also currencies are going to collapse, inflation is going to rise, and markets will also come down dramatically, stock market. People will, as I have said for many years, ask for delivery. And when they ask for delivery, there will not be any silver there. no silver at
Yeah.
this price. Why we're going to see the most massive explosion, as I said, and that's just the beginning of, as I said, the accelerated fall of this monetary era. Of course, gold will follow, not as fast as silver, because there's not the same type of shortages in the gold market as there is in the silver market. But the metals will now start the final phase in this era of climbing to levels that will be multiples of current levels.
As two of the sharpest minds in precious metals agree, we're not just in another bull market, we're witnessing the final explosive chapter of a broken fiat system. When the dust settles, physical gold and silver won't just preserve wealth, they'll redefine it. The window to position yourself ahead of the greatest transfer of wealth in history is closing fast. Stack quietly, hold tightly, and get ready for what's coming next. Your future self will thank you. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.